Hi guys, welcome back to my channel. In today's video, I'm going to go through how I was able to trade through a choppy market. Now, usually I don't recommend trading choppy days. Usually tend to get faked out. There aren't very high probability setups for you to be able to capitalize on, and it's really difficult to find market direction because usually there isn't one. However, on this specific day, that I'll go through with you guys, I took a couple of live trades, and the first trade that I took was within about the first half an hour of market open. And over the past 2 weeks, market hasn't really been giving direction until after 10 a.m. So this trade was right before 10 a.m. I'll go ahead and go through it with you guys. So I took the first trade that I took was a red trade, and I ended up being able to capitalize on a different type of strategy and be able to make that back. So I'll go through how I got faked out on the first trade. I'll go through, my stop loss and my mindset, my emotions, and then I'll go through how I was able to capitalize on the second trade. I'll also go through what you kind of need to look out for when you are trying to identify if market is choppy that day or if we're going to have solid direction, what you need to look out for in futures and other market sentiment indicators to kind of analyze what the market is going to do for that day. All of that being said, don't forget to like and subscribe to my channel, and let's go ahead and get started. All right, guys, so the trade that I'm going to go through with you guys is on SPX. So I took 2 trades. It was on January 26th, and it was this past Thursday. So I'm going to show you guys NASDAQ, ES, and SPX and kind of show you where the choppiness laid. So in the first probably hour, 2 hours of the market, there was really no significant direction on futures. And over the past 2 weeks, like I've said, we've had to wait probably the first hour until at least 10 o'clock because we've had a lot of economic data. And even past that into kind of lunch hour, we had to wait until market actually gained some direction. So usually how I identify if futures have direction or not is how they trend in comparison to their VWAP. If they touch the VWAP at least 2 to 3 times in the first half an hour or to an hour of the market open, it usually signifies that there's choppy momentum in the market and there's not a solid direction. Also, if you look at the 15-minute time frame and you don't see a strong trend within 2 candles of the 15-minute time frame, also usually signifies that there's no direction in the market just yet. So if you look at the NASDAQ and we look at ES as well, you can see that overall in the first probably 2 hours of market open, there was really no direction. Futures tried to make a leg up. NASDAQ wasn't able to hold above the 12,050 level, rejected, and ES wasn't able to hold above 465, rejected. Tried to get a move down, but if you look at the 15-minute time frame, when it did break below its VWAP, it held the 40.35 level and bounced back up, touching its VWAP again on ES, came back down, held the 40.30 level. There's a little zone on ES below 40.35 into 40.30, held and then bounced back up, touched its VWAP yet again. On this third touch of its VWAP, it then ended up creating a trend up. Same thing with the NASDAQ, comes down, touches its VWAP, holds its VWAP, bounces back up, not able to break the 1250 on the second leg up, rejects yet again, comes back down, makes a small move down, holds the 11,900. So the range now is from 12,050 to 11,900, and then it starts an uptrend after it breaks the VWAP on that third try. So in the first hour, usually what you'll see is you'll either see direction or you'll kind of see the market create a range. And what we saw was the market created a range. And ES's range was from 40.65 to 40.30 and 40.35. NASDAQ's range was from 12,050 to 11,900. Now, another thing that I always like to pay attention to in the first, especially 30 minutes of market open, if I'm watching futures to break a level of support or resistance, I always like to wait for that level to hold above or below prior to entering, especially on the 5-minute time frame, because what can happen is what happened on this day and how I got faked out. Was watching ES to break 40.65 and NASDAQ to break 12,050. What happened is both futures broke those levels. You can see here, broke those levels, but they were not able to hold above those levels. What you see is a wicking action going on, meaning that buyers tried to push the stock up above that level. Sellers ended up stepping back in, and you can see that ES closed right below that 40.45, and NASDAQ was not able to hold above the 12,050. Both of them wicking, and in these wicks, this is where people get faked out on whatever ticker that you're looking to trade. So my plays that I was watching on SPX was above 1250 and then below 1235 for the gap down. So you can see that in the first probably, I would say 15 minutes of market open, SPX kind of created this range between 40.50 and 40.45. So at this point, if you were watching this, you could have also taken the 40.45 break to the downside as the rejection of futures on their high. So this would have also been a high probability setup If you, for example, I was watching the 40-50 break, you could have also watched the 40-45 break. Anytime that I see a two-touch resistance level on an intraday time frame or two-touch support level on an intraday time frame, usually signifies that it is a strong level of support or resistance, and you can see that it was a strong range on SPX as ES and NASDAQ were trying to gauge direction. So the 40-45 break would have been a really nice break as well to take. Let's go ahead and look at the video. So I ended up taking the upside play on SPX. It ended up breaking 40-50 as NASDAQ and ES were clearing those levels, but they had not held yet. And that is the problem. I did not wait for the hold. And this is the 5-minute candle that opened slightly above 1250 on the NASDAQ, but on ES futures, it did not open above 40.65. When you are trading SPX, you do want to pay attention more to ES futures than the NASDAQ. When you're trading anything else, you want to pay attention more to the NASDAQ than you want to do ES. But SPY and SPX follow more closely to ES futures. So you can see SPX here on the 1-minute time frame here. It's right under 40.50, trying to break. This next 940 candle is where I look to enter. And this is from a strangle that I did the day before. I usually let my loser side just expire out on a strangle. So here we go. Entered the 40-50 calls on SPX at 940. And if we look at the 940 candle here on the 2-minute time frame, this was the candle that broke above 40.50. Now, even on the 2-minute time frame, I did not wait for the 2-minute candle to hold above 40.50. Always, always, always within the first 30 minutes of open, you want to wait for a candle to hold. And when I say a candle to hold, this is what I mean. So if we look here, I want to see, let's say this breaks out. This is my breakout candle right here. I want to see the next candle open above my 40.65 candle for entry. This is the breakout candle. You can see every single one of these broke out, broke out, broke out, broke out. None of them were able to hold. If this candle breaks out, I want to see the next 2-minute candle open above 40.50. So all in all, I didn't really follow my plans on these specific plays because neither of these candles held above 40.50. Neither of these candles held above 40.65. And this candle slightly opened above 12.50. But again, like I said, when you're trading SPX, you want to pay attention more closely to ES futures and its levels of resistance. I ended up entering SPX on this 940 candle, and we can clearly see rejected the 40.50. ES ended up rejecting 40.65, and the NASDAQ ended up rejecting 12.50, and I ended up getting caught in a pullback. And this was within the first 30 minutes of market open, which I always tell people the first 15 minutes, market's still trying to find direction. So be careful trading within the first 15 minutes of market open, especially if there is no solid direction or if futures do have strong levels to the upside or downside that they're looking to break. You always, always, always want to be cautious within the first 15 minutes of market open. Go back and look at the video. We can see that the 40.50 was my target to the upside. My stop on this was 40.45. So you can see that it rejected the 40.50, came back down to the 40.45, and I believe I exited around 9.42. So this was a really quick and painful loss. So let's go ahead and watch it. So I opened the premium, and this actually, as it pulled back and rejected the 40.50, the premium lost a lot of value in a very, very short period of time. I was only in 10 contracts, so that's about $15,000, and I ended up losing $5,000. The premium dropped $5 within 2 minutes on that pullback. It was a very, very strong rejection, and the minute I entered, it rejected. And it was so quick. Like sometimes when I enter a trade, and this is when you should follow your gut, always. If you enter a trade and the minute you enter your trade, you instantly regret it, exit it. And I have seen this within myself so many times is the minute I enter a trade and I get anxious or I feel like, hey, this was not a good entry, I did not wait for this or I did not wait for that, exit it. Look for a better entry because that gut feeling will save you some big hefty losses. The minute I entered this trade, I saw that ES and NASDAQ did not hold. I did not wait for the hold on ES futures and I immediately wanted to exit, but I ended up holding it instead of exiting the position. And you can see here, immediately once I entered, premium pulled back. You can see here almost at $12. I entered at $15.90. We're at the 941 candle here. I'm already down about $3,000 on this play. See still, market is pulling back. We got a strong rejection of the 40.50 level. And my stop on this was 40.45. I was trading live on voice with my Discord. Yep, I waited for the hold below 40.45. I can tell because it's a 943 candle and that 942 candle held below 40.45. So I actually gave this trade even more room than I probably should have. And there we go. I exited the position here at 9.43. Strong pullback. You can see premium dropped to $10, so a $5 loss on that premium. And if we go back and look, this is your 9.42 into 9.43 candle. So this candle did try to hold. You can see it's a wick to the upside, which is why I was holding the premium. It did try to hold the 40.45 level. It wicked up here. That was the high of the candle. Sellers ended up jumping in, pushing the candle back down, and that's when I exited towards the end of this candle here, this 2-minute candle. And you can see at the same time this 9.40 candle into ES futures dropping back down, and this 9.40 candle on NASDAQ futures rejecting as well. So I lost about $5,000 on that specific play here, almost $6,000 actually on that play. So one thing that I do want to mention, and I say this a lot in a lot of my videos, is that first trade that you take is literally gonna direct the rest of your day. So depending on whether it's a profitable trade or whether it is a red trade, it's really gonna determine the track or the kind of direction you take for the rest of the day. If you end up taking a red trade in that first trade, what I always like to do, I always like to have 2 plans no matter what, to the upside and downside for any trade that I take. If the upside plan doesn't work, I still have my downside plan. My downside plan on this specific SPX play was the 40.35 break into its gap fill of 40.16. So I did have a downside plan and an upside plan. The second thing that you want to do, you always want to take a step back, even if it's for 1 minute, 2 minutes, pull yourself out of the markets, reset your mind. Sometimes you have to do it very quickly, but take a minute or 2, pull yourself out, understand that you took a loss, understand that the market didn't give you the move, look at the next play that you're looking at, whether it's the upside or downside, and then end up taking that move, okay? So definitely take a step back, reset your mind, exit the loss in your mind and emotions, exit it. And I know sometimes it's hard, but if you do not exit that loss, after you take it and it's the first trade that you take, you will end up revenge trading. So I could have easily gotten into puts right off the bat, exited my calls, got into puts. No, I took a step back, look at my next opportunity. What is the next opportunity that I can take in this specific play? Follow that opportunity all the way through and ended up making my loss actually really well. So in this specific play, my next opportunity was either going to be SPX below 40.35 for the gap fill down, or back above 40.50 waiting for it to hold. As SPX broke 40.35, I wanted to see ES futures clear its VWAP and NASDAQ clear the 12,000 levels. So those are the 2 levels that I was watching on ES and the NASDAQ. So I wanted to see ES clear its VWAP, NASDAQ clear 12,000 for SPX below 40.35. You can see when we did get a rejection, it was a strong rejection down. Like I said, you could have taken the 40.45 level break as well. The only reason that I didn't take that is I was still in calls and that was my stop loss. At the same time, I wanted to wait for the gap fill as that was a higher probability setup to take. And after a loss, I always want to wait for the highest probability setup that I can potentially take. I wanted to see ES futures clear their VWAP levels that was sitting around 40.50, which is also a psych level on ES, and I wanted to see the NASDAQ clear 12,000 for me to take SPX's gap fill. So if we go ahead and take a look, SPX rejected really fast. So okay, let's see where I entered. So it's 9.47. SPX ended up clearing this gap at 9.48. So this was the 9.47 candle. SPX broke below 40.35 at 9.48. That is when ES futures were starting to break below 40.50 and its VWAP, and NASDAQ was starting to break below that 12,000 level. So if we go ahead and take a look at when I entered, I believe I entered at the 9.48 candle on SPX futures on the SPX index once it broke below the 40.50 level. I saw a strong bearish candle down on both futures and on SPX, so I was confident in taking that play below 40.35. The gap started at 40.36. Also, there was high volume behind futures. If we go ahead and take a look here on that pullback, you can see when it rejected, volume was still very high. Rejected volume was still very high on futures. So 9.48 candle, I'm starting to look at puts here. You can see my ready to enter the 40.30 puts on SPX here. I believe on my second play, I entered 15 contracts. So on my first play, I entered 10 contracts. On my second play, I did size up to 15. That's not something that I do recommend doing. I usually just stay the same size. But on this specific day, since I had taken a heftier loss, I did end up sizing up just 5 contracts. Nothing too much heavily are nothing that I'm not used to, but it was just a little bit more in case the move was a quicker move and it didn't fill the entire gap. Usually premiums tend to not move as quickly when you're in the play, but when you're taking a loss, they have no problem pulling back. The reason why I haven't entered yet, because I tried to wait for a 2-minute candle to hold because I was so cautious for my first play and not waiting for the candle to hold. I really wanted the candle to hold. There we go. Right when the 2-minute opens, I entered. I entered at 9.50. Once I saw that 2-minute candle open below 40.35, I was in. I entered at a price of $13 here and 15 contracts. So if you look here, I actually did end up waiting. So that's actually really good on my part, and I'm proud of myself for waiting because this was a strong bearish candle down, and I know a lot of people that were trading with me entered on this candle, but I wanted to be a little bit more cautious, wait for the next candle down. Also, this candle held below 40.35 and it opened below the 21 EMA, so this is the safest entry that you could have possibly found. My targets to the downside were 40.25 and 40.20, and then the gap fill at 40.16. Now, ES futures had a level at 40.35, and then below 40.35, ES futures had a level at 40.30. So those are the levels that I was watching for it to potentially bounce off, and we can see that on that 9.50 candle, ES broke below its VWAP right around 40.45. So it had about 10 points and then another 5 points. So about 15 points down to its next levels of resistance. So in this 10 points from ES having below 40.45 down to 40.35, it has about 10 points to fill the gap, which means in my mind, the SPX has about 10 points to fill down as well, which is exactly what it did. From 40.35 went down straight to 40.20, 10, 15 points right there in that move. So let's go ahead and see when I exited this position. Here we go. Premium starts to pick up here really nicely. So we're still in the 9.50 candle here. Premium holding nicely. We're up about almost $2 here on this premium. And I'm up about 2,200, 3 grand now here. Nice premium spike up to $15. In literally the first minute that I entered, premium jumped $3, $2. So this was a really, really great setup here. Even if you had exited on this premium spike down, the first target was 40.25, which I did tell some of my students to exit at the 40.25 level. So when SPX did pull back on this 2-minute candle here, you can see that it pulled back to the 21 EMA, just retesting the 21 EMA prior to the continuation down into 40.20. ES had not touched the 40.35 level here. It's not until the end of the 9.55 candle we see ES close, bounce off of the 40.35 level. So this was still a good play. I did get caught in a very, very small 2-minute pullback, but like I said, the pullback was to the 21 EMA, and my stop on this was 40.35. So go ahead and take a look. So even if you had gotten out in that first minute, you would have caught about a $3 premium move, which is really, really good on a 1-minute scalp. A $3 premium move is insane on a 1-minute scalp. So I think that would have been a good exit at the 40.25 level. Some people, like I said, got in at right at that 40.35 break, but still really, really good setup here. High probability setup. Premium still holding really well. We're getting into the 9.52 candle, and that is when you'll see the premium pull back slightly. So this is the 9.52 candle. Towards the end of the 9.52 candle, SPX did end up pulling back on the premium, and I did end up being break even on the premium. I was back down, so I didn't lock on that first target because I did feel as though SPX had room to 40.20 as ES futures had room to 40.35. So, and this pullback was straight to the 9 EMA, so I was comfortable holding through that pullback. Wasn't a significant move up for me to be able to exit the position or lock any of my positions. So as you can see, I did end up being back down to break even. The premium is at $12.90, close to my $13 entry, still in this position. And close to the 9.54 candle here, the next 2-minute open. So I always watch it on the 2-minute, not the 1-minute, because whenever you watch it on the 1-minute, you definitely tend to get faked out a little bit more because there's so much noise on the 1-minute. I don't watch any ticker on the 1-minute anymore. I watch all of them on the 2 and 5-minute. I enter on the 2-minute, so I'm never watching the 1-minute time frame. I just don't think it is good for scalping. I don't know how I used to do it so well, but I personally, the way that I'm scalping now, I'm trying to catch higher probability setups with higher percentage moves. So the 1 minute is not going to help me with that. Here we go. Premium holds here on this 954 candle. This is your 954 candle open, rejects the 21 EMA, starting to make a move back down. This is the end of the 950 candle into the open of the 955 candle. That is when ES futures go straight to 40.35, bounces. You can see buyers step back in, pull it back, and that's why you get this huge wick to the downside. So my target on ES futures is the 40.35 touch. Not looking for it to break. Premium start to pick back up yet again. Also, I wanted to exit this play before 10 a.m. We had some data coming out on Thursday at 10 a.m. So this is 9:55. So I definitely felt like at 10 a.m. when the data came out, market would make a move, which it did right at 10 a.m. When the data came out, market ended up reversing into an uptrend and started that uptrend for the rest of the day. Ended up being slightly bullish, not a huge uptrend, but overall market held the upside for the rest of the day after 10 a.m. So my goal on this play was to exit this position before 10 a.m. because when you hold through a 10 a.m. candle and there's economic data coming out, that is a gamble. It could go either way, and you never want to do that. No matter what your sentiment is, whatever market sentiment is, what you think the data is going to come out, you just don't know how investors are going to react to it. I'm up about $5,500, so up most of my loss already on this play. Premium goes up to $17 here. Really, really nice premium spike. Exit some of my position on that premium spike. Really nice move, $4 move up on that premium. Exit some of my position at 956, which is towards the, I think this is the open of that candle, right? No, towards the probably open of this 956 candle. It starts to push into my first profit target of 40.25 and then my second profit target of 40.20. Remember, this is your 955 candle, so I want to get out before this candle bounces. I believe I even exit some more. I'm up about $6,200 here. There we go. I think I exit some more here. Almost up 7,000. This is a huge premium spike here, up almost to $19 from my $13 entry, which is about $6. It's a really, really good premium spike. That's almost 50% on this play, and I believe I do exit close to that 50% mark. There we go. I exit some more there. I exited 80% of my position at this point, so I only had runners left, and that premium went to $19, almost a 50% move on that premium spike, and I'm up about $7,000. I believe I exit the rest of the position in about 2 minutes, and I think I exit that at around $17 as well, and ended up making around $6,600. So I exited about 90% of my profit at this point. And then the two runners that I had, I believe I exited right at this when it touched the 40-30 level, because that was my stop loss on what I had left for the runners. I ended up making about $6,600 or $6,200 on this play, and I was up only $200. I did end up taking another play later in the day to the upside, which is what had me gain another $2,000. So I was up on the day $2,200 overall. But this is a really, really good setup here. Like I said, whenever you take an upside play, yeah, I took a loss, and I took a pretty hefty loss for me. And it was about a good 20%, 30% loss to the upside. Market ended up reversing. I looked for the next play to the downside or to the upside, depending on which way market made the move. ES futures cleared VWAP. It had about 10 points down to its next level of support. So I was able to capitalize on SPX's gap fill about 10 points down. From where I entered, it was 40.30 into 40.20. So a 10-point move from SPX, from ES futures into SPX futures, 10-point move as well. So you can potentially take ES futures, let's say it breaks its VWAP and has 10, 15, 20 points to its next level of support. You are able to take SPX on a breakout if ES has some room to the downside, or if NASDAQ has some room to the downside as well. So it's a really, really great setup to the downside. Upside, obviously, I ended up getting faked out, but those are some of the things that you want to look out for. So all in all, when you're looking for a choppy day, you want to wait for the first 15 minutes to identify market direction. You want to see where futures are trending in conjunction with their VWAP. If it is a 2 to 3 touch on the VWAP in the first hour or hour and a half of market, usually it signifies a very choppy day. You don't want to trade anything like that. Usually if the market tends to give you a range, watch the breakout of that range. For example, 40.65 to the upside and 40.35 to the downside on ES futures. And if we look later in the day when it did end up clearing its VWAP, making an uptrend, it did end up breaking 40.65 and creating a high at 40.75, which it ended up closing at. And you can see that SPX did end up making a move up. It wasn't the strongest move up, but it was a very slow overall day. These two specific plays I wanted to focus on because one, it teaches you how to come back from an initial loss. You kind of want to make sure that you have trading plans to both sides of the market depending on how the markets move. You never want to be biased to one side or the other. You want to take a step back after your initial loss to figure out what you did wrong. Even if you don't figure out what you did wrong, pull yourself out of the loss emotionally prior to continuing so you don't revenge trade and you don't take low probability trades. Wait the first 15 minutes of market open to determine where futures are sitting in conjunction with their VWAP. If the futures have created a range within the first half an hour, you want to wait for that range to break out. And then if you have economic data coming out that week, you always wait until 10 a.m. for the economic data to come out. If you do find a setup prior to 10 a.m. like I did today, exit the setup prior to the 10 a.m. candle, because if you hold through the 10 a.m. candle, you do risk the position depending on how investor sentiment comes in. All right, guys, so that's it for today's video. Thank you so much for watching. If you have any questions on anything that I went through in the video, go ahead and comment them down below. If you have any video suggestions or anything that you would like to see or for me to clarify for you guys, also comment that down below as well. And I will see you all in the next video. Bye.